I'm Nicole Rachat with the Investing News Network, and I'm here at day 3 of PDAC, and joining me today is Alain Corbani of Finance SA. How are you today?
I'm good. Thank you very much, Nicole.
And how has the conference been so far?
Conference was great, even though I only arrived yesterday afternoon, but didn't stop. But we need something new to happen, and we can discuss about it. But I think that the mood is still very positive, but for the right reasons. But I think that a lot of people are missing the main point.
So to circle back, we chatted at the end of last year, and we discussed Trumponomics and how it might make gold great again. Do you believe that we've started to see that this year?
What we saw this year was something that was that we had talked about earlier, which was that the Federal Reserve wouldn't be able to increase rates at the pace they wanted to initially because we had slower growth going on. So, and this is exactly what we had when the president of the Fed in December, I think, would change his language. And the language was, we are not going to raise rates any longer until we see some strength in the economy. So now we have a stable inflation. We have rates that we know for sure nominal rates are not going to go up if we don't have more pressure on prices. And you have a perfect environment for a higher gold price. Now, the only missing ingredient in that equation that would trigger gold to a higher level is the US currency. For now, it has been playing the counter cycle, rightfully so, but I think that the investors need to see a slightly declining currency, U.S. currency, to suddenly feel more appetite for the sector and gold particularly.
Okay. So do you think that will happen this year? Do you think that they're they're pausing and waiting and kind of gearing up for what may happen, because gold has started to climb a little bit and the U.S. dollar has not done so well this year? It's still not horrible, but it's kind of still, it's not at the levels that it was last year.
I think that I'm not a gold bug. I'm everything but a gold bug. But I don't see how, unless we have more tensions on the international front, and we do have, but this is all news, you see. Like, we have talked about China, we have talked about Europe, we have talked about Japan, we are talking already about the US with the new House of Representatives now challenging the US president. So many bad news are already known, published, that I do believe that the US dollar is going to start weakening when the tendency is to think, we're going to have more bad news and the dollar will be counter-cyclical. And I really don't believe so. Now,
I will circle back at the end to when you said we need something new. Yes. So I'm not going to forget about that. But I just wanted to touch quickly on, there's a lot of M&A activity in the gold space, and I just wanted to get your thoughts on that, since it's the hot topic right now.
It is a very hot topic. Over the last 6 months, we had four dinosaurs who have tried to merge, So the first deal, you remember, it was the Barrick Randgold deal, and it made a lot of sense because the two men were complementary. So we needed more established or recognized operating expertise, and Barrick got it with Randgold. So I applauded that first deal. The second deal was Newmont acquiring Goldcorp. I know that a lot of rumors are going on. Everybody has her own story about it. But I also liked the deal. Why? Because it wasn't about, and they made it very clear, it wasn't about growth, dilutive growth, or to grow for the sake of growing and showing higher production numbers. It was about cherry picking the best assets and spinning off the marginal assets. So ultimately, the strategy was to get more qualitative mines with obviously a higher profitability. So this was a great deal too. Now, where I have a problem is with the last part of the story. And the problem is that we have, in the short term, we have faced a destruction of value. When our friends at Barrick decided to go after Newmont, if you look at those, the performance of those names, you could see that Newmont went down, Barrick went down, Goldcorp went down, and on the sideline, our little Acacia, if you remember, the African subsidiary of Barrick, was really hurt badly, 20%, down 20% in less than 2 weeks. So there are two approaches to this as an investor. The first one is to think Barrick has good reasons to find more synergies with Newmont, especially in the US. We all agree with that. But there are ways to do it. And one of my peers, American peers, said that it is very arrogant from one company to make an offer to purchase another company at a discount. So this is the new environment in which we operate. I think that some mining companies believe that they can grab assets at a discount, which is more than fair, and this is how it should be done if you do a right job, but not at the expense of the shareholders, right? So if you want to gain credibility, the very least you can do to convince the shareholders of Newmont, in this instance, is to offer them a cherry, to offer them a plus. And we don't get it. We're just getting promises that we'll get more synergies and costs will go down, and ultimately in 2 years, 3 years, 4 years, we'll have a better group of mining assets. And I do believe so, but we're not here for the 3-5 years, unfortunately. I would love to. We are shareholders of Newmont, among others, and we would like to see a decent price.
That makes a lot of sense. I'm going to switch gears a little bit, but still stay on the M&A track. I'm going to switch gears to silver for a second. Okay. Do you think that we will see more M&A activity in the silver space? I know we have Pan American and Tahoe close their deal. Yeah. Do you think that we'll see more, or if that's kind of a one-off?
It's always, if you had asked me the question just after the first mega merger, the Barrick Randgold, I would have told you we don't know. The answer is nobody really knows if it's the start of a new aggressive growth strategy or not. And I still don't have an answer for you. Everybody's dreaming about more, more aggressive approaches. People want action. It's not necessarily good for investments. More action. You can do very well without blood on the street. So the honest answer is I don't know. But do I see synergies within the silver space? Honestly, right off my mind, no. The answer is no.
And one last thing on silver, since we're talking about it, it's remained, it usually kind of flows with gold, but it's remained relatively flat this year. It hasn't seen much of an increase like gold has. Do you think that, what do you think the catalyst behind that is, and do you think that this will continue, or do you think that silver is primed for a little boost as the year goes on?
It's very disappointing to see silver at these levels. And I will simply remind you that if you must really count the number of silver mining companies profitable at $16, $17, even $18 the ounce, I will have a hard time counting more than 5. So we have a conundrum here. these mining companies for silver have never been really profitable. They have always waited for much higher silver prices to start showing earnings, not cash flow, earnings. And why is silver so low? I would tell you that probably for now, the movement in gold hasn't been validated by the majority of the investors. In essence, I think that people are waiting for a validation of the uptrend in the gold price to start buying silver, bidding silver. And this is what we need to do. So basically, I think, to summarize it and be very, very simplistic, we would need gold above 1360 to have suddenly play the catch-up, have silver play the catch-up.
And now I'm going to ask you. You said we need something new. Yes. Can you expand on that?
I think that this industry, I've been working on the mining front for the last 27 years. And what I said, we need something new. I think that we need a new guard. We need new faces. We need a new approach. I know that sounds a little bit philosophical, but the reality is that we need the new Bristow to show up. We need the new, if we can, the new Peter Monk. We need to see the new faces take the lead. And honestly, again, there are very few of them, but not enough. So we need a new generation of entrepreneurs, more inclined to focus on the fundamentals, less on the promotion, obviously, and deliver. And we have the talents. We just need to see them show their faces and execute.
And kind of come with fresh ideas, kind of change what has been happening in the space so far.
We maybe, but we can clean up, do some cleaning. Let's do some cleaning first, and then we can talk about something different. But a little bit of cleaning, regain credibility, focus on delivering, executing on the balance sheet, on the income statement, on your promises, as simple as that. So we need a new guard to give some more credibility to this industry.
Okay, and my final question for you, do you have any predictions for precious metals this year on a whole?
Well, I do. I do, because as we said earlier, we've got really a macro environment that is fertile for a higher gold price. So short term, we were overbought. The institutional investors had already anticipated this move by buying a lot of ETFs, gold mining ETFs, all over 2018. So now they are taking some profits, rightfully so. So this is only one leg of that bull market. So in a nutshell, we need to see gold going breaking the 1350, and it should break the 1350 this year. Silver will follow through, and probably, if I have to make an estimate, above 1360, so maybe 1400 at the end of this year, and silver hopefully will get back above the $18-19 the ounce.
All right. Well, thank you so much for joining us today and taking your time out of a busy schedule. Once again, I am Nicole Rachat with the Investing News Network on day 3 of PDAC. And once again, this is Alain Corbani of Finance SA.